Now, let us talk in details about the spread. So the spread is the difference between the quoted ask price and the bid price. The quoted ask price and the bid price. So let's go to the market and look here. So here we have the bid price versus the ask price. So you can see the bid price is 356.85. The ask price or the offer price is 358.05. So you can see there is clearly price difference between these two. There's clearly price difference between these two. So here's the clean chart. So you can see there are two lines here. There are two lines. One is 358.05, which is the ask price or the offer price, and the 356.85, which is the bid price. So when you look at how you interact with these liquidity providers, suppose you see an opportunity to buy coffee. So this is coffee. So this is a commodity. Suppose you see an opportunity to buy coffee. When you enter your buy order, it will be filled with the ask price or the offer price. So you should always look at them as the opposite part of the transaction. So when you buy, you enter in the sell price that they have provided. When you sell, you enter into the buy price that they are providing, because they will be buying against you, they'll be selling against you. Those are the liquidity providers. They have set this as the offer price, the price at which they'll sell to you. And they'll set this as the bid price, the price at which they'll buy from you. So they are bidding. Okay, so the difference between the two is what we call the spread. Okay, and the spread is usually measured in pips or in points. So it's usually measured in pips or in points. So here we have, this is I think this is Euro JPY. The price is around 165.017. That is the bid, and the ask is around 165.112. So the bid ask. So the difference between the two in terms of pips is what we call the spread. So you may find for pairs like Euro USD, they have very, very low spread. Sometimes the spread can be zero. So we have 1391, 1397. So this is about 6 pips. So the difference here is about 6 pips if you measure with the 4 decimal place. So if you minus, you find the difference is 0.0006. So it's about 6 pips. So that is the spread on Euro USD. And that spread is the profit margin that goes to the liquidity providers or the market makers. The difference between the ask and bid price. Basically, in this market, we have 3 types of spreads that are available in different accounts that are provided by the brokers. We have the fixed spread, so sometimes we have assets that have a fixed spread. So for the day, the spread does not change. But we have variable spread, which is mostly used in the foreign exchange markets, because spread would change based on the supply and demand conditions of the market. And the liquidity provider is there to make sure that the spread does that in order to ensure that there is buying and selling pressure in the market. Sometimes you'll find the spread having a commission that is calculated as a percentage of a spread. So you find like a zero spread account, but you find the commission that they are charging you for taking a trade is a bit higher because they have fixed their spread into the commission. So let's have a recap. Ask price or offer price, it's a price at which the market maker is willing to sell to you. So when you enter your buy order, it will be filled in the ask price. And bid price is the price at which the market maker is willing to buy from you. So when you sell, your order will be filled in the bid price that is available, and vice versa. So the spread basically reflects the riskiness of a currency pair. So the more exotic and the more illiquid the pair, the wider the spread. That's why you find for major pairs, they have a thinner spread compared to exotic, compared to the cross pairs.